of June, and it's really, I was going to say it's a Bank of England day. It's not really. The biggest surprise has come from the Swiss National Bank. Big rate move this morning. 50 basis points. Nobody was expecting a move from the Swiss National Bank. So last night we had the anticipated 75 basis points from the Fed. We've had the Swiss National Bank this morning, and the Bank of England 25 basis points. Somewhat disappointed, to be honest, markets. There was anticipation of perhaps moving to 50 basis points as well, but 25 basis points still a significant move from the very cautious Bank of England. Inflation, they said, looking to peak at 11% now, a whole 1% higher than the market was anticipating just a few weeks ago. Obviously, that big, strong CPI data from out of the US on Friday has really spooked markets, and particularly, obviously, the Fed went with their 75 basis points. Let's just go through them all. So the Fed, another 75 basis points is anticipated now in July. There's mixed chatter about what the September move may be now and into the year end. But the reason I say that is the back of some detail within the PPI data and the CPI data. There's still this potential argument that we might have seen the top in inflation. Obviously, it didn't happen in March when everybody was talking about it. This may be the top. Who knows? But, we are at a 40-year high. The banks have had to act. Ordinary people, Main Street, not Wall Street, ordinary businesses and households are suffering. They see real price inflation in, things, their everyday costs, their energy costs, their food costs, their rent, their, wages are going up as well if they've got a job, if they've retained a job, but they're not going up as much as the costs are. Obviously, this isn't going to last forever. That's the other key thing as well. The tragic war in Ukraine will grind on, unfortunately, through the summer by looks of things, but it will come to an end. The impact it's had on some commodity prices, things like wheat and fertilizer costs, and obviously the follow-through impact on the price of oil will start to ease at some point. But at the moment, those trends don't look like they're broken. Good afternoon, everyone. Hope you're well. Obviously, anything you want to talk about, let me know. We'll have a look at the charts in a minute. I'm just having a little chatter on at the moment. Mohammed, I don't know what that means, my friend, but good afternoon to you, or good morning, wherever you are, or good evening. So that's the Fed yesterday, much more aggressive than initially expected. Only a couple of weeks ago, it was that CPI data really that probably pushed many of them forward. The vote in the UK, let's start with the Swiss National Bank as well, which has been the biggest surprise. Remember, interest rates remain negative there, but a 50 basis points was a big surprise for the Swissy. We had a big 2% plus move for the Swiss franc against most of its peers today. Huge day. That was a big surprise this morning. And then the Bank of England with its 25 basis points. So now, who's next in line? Well, it's the Bank of Japan. Bank of Japan have been constantly talked about the accommodative policy still being in place. They said earlier in this week they're going to buy as many JCBs, that's Japanese government bonds, the 10-year ones and beyond, as possible. Remember, Japan issues 100-year bonds. Very stable currency, typically very stable economy, big, strong, growing economy, third biggest economy in the world since the Second World War. But in last 30 odd years, inflation again hasn't been around. The growth hasn't been around. We've had this very stagnant Japanese economy, a workforce that is aging very, very rapidly. And people don't move around in Japan as far as jobs are concerned. Worry about the aging population has been addressed with technology. Different countries have different ways of dealing with things. Anyway, as far as the economy is concerned, Japan, data very mixed as we go forward. But some big moves today. So will they move? Minus 0.11%, Bank of Japan. They say the politicians there are still sticking with this. The new Prime Minister is still sticking with this accommodative policy as well, very much in union. The Finance Minister, the yen has weakened significantly, but it's turned around quite significantly today. We'll have a look at the chart in a minute. So anyway, that's my 10 pence worth for the central banks. About 5 minutes ago, 10 minutes ago, we had the big data of the day out of the United States. Fully fed, big slip. So fully fed manufacturing index came in at minus 3.5. It was expected to pick up from 2.6 last month, to 5.1 this month. It hasn't. I mean, the Empire State and the Empire State and the Philly Fed notoriously move around a lot, but a big miss there at minus 3.3. Unemployment claims again have ticked up a bit. It's back over that 200,000, but still historically they're getting back to their historical norm, 230,000. The weekly claims. I can't see the continuing claims at the moment. We'll have a look at that in a minute. Building permits have missed at 1.7 million compared to 1.82 last week, and 1.78 expectations. Same with housing starts, 1.55 million compared to 1.7 million. Although the housing starts were actually upgraded to 1.81 million. So that's actually quite good news, the cooling of the housing market, because the housing market is part of this inflation bubble that's pressing US prices higher. So as far as the data is concerned, it's a big miss across the board. Philly Fed's missed, unemployment claims are worse than expected, but getting back to normal. So that's quite good news, actually. And the building permits and housing starts missing is also quite good news when it comes to the inflation story. So we might see a cooling of the dollar on that data as well. So let's have a look at the charts. Enough of my blethering on. Let's have a look who's here today. So Sylvester, hello. Kyle, good afternoon. Good afternoon. And first request comes from Daniel for the euro dollar. Talk about it. Well, let's have a look. I've changed the charts today. Let's just get me down there. I've used white charts. So I'd love your feedback, guys, about whether the white background or the black background is better. This is a different setup. This is Bollinger Bands we've got on here. Positive candles are black candles. Negative candles are red candles on here. There's a volume data across the bottom here. This first line is the ATR, the average true range, one of my favourite indicators. We've got the MACD below there, normal oscillator, and we've got the RSI down here, the red line, which is set at 7 for a change. I've reduced it from 14 to 7, so it gets a bit more peaky, a bit more overbought, and a bit more oversold. So here, this is cable. Daniel was asking about the euro. Really, 104 has been that big number. Daniel, my mouse won't move now to my other screen. It's always the way when you try to do things live, isn't it? This is the euro, Daniel. As you can see, the big blue line down here is 104. So we punctured it. Let me zoom that up a wee bit. We punctured it yesterday and then reversed as the on the Fed news. Yesterday we rallied up to 105.60 and we come back down, but we're under 104. And then we reversed again in this current hour. This is the hourly chart, guys, on euro. So the trend remains very much to the downside. If we go up the time frames, you can see the MACD here angling under 0, ATR moving down, RSI bouncing up after an oversold area. But if we go up to the 4 hour, you can see big sell-off this week under that key 104. Here, just going back to the 9th of June, we were pivoting through 107. 107 was our pivot. So here we are, 7,654. So 300 pips below where we were just a few days ago, really. It's the 4 hour chart. If you go to the daily chart, you see what a sell-off we've had in the euro. Basically, ECB disappointing last week and a big move down. So 104. So obviously the question then goes, is it where do we go next? Well, this line here, you can see this next line here, this 103.11. This goes back to our weekly chart. We zoom in on the weekly chart. You can see the next support. We look left. It's off this chart here on the weekly chart. So we have to zoom in to see where this 103.11 support comes in. And it takes us all the way back here to the end of, let me just say this, to the end of 2016 and the beginning of 2017 when we had that shock. A new president, Mr. Trump, took over. The euro dollar rallied during 2017, only to collapse again during 2018. So we're all the way back here to January 2017, December 2016 lows at 103.14. That obviously then brings in the chatter of parity going forward. Again, if I zoom this in and take it up to the next level, which is our monthly chart, you can see this is the monthly chart. Remember, big high time frames, guys. You can see we go all the way. This is this area here, and this takes us back. This is 2002, where our 103 line goes. So you go right off the chart here. So big pressure on Miss Lagarde and the guys at the ECB now to act. They obviously, as far as the market's concerned, they didn't act strongly enough. But just coming back to your daily trading, Daniel, and everybody's intraday trading, the trend remains to the downside. We've bounced a wee bit this morning, literally now, in the 1 hour chart, and we're back to our moving, our mid line of our Bollinger Bands. But you can see we're flat. The Bollinger Bands aren't trending. Here we had a big trend low. We had a nip in here, we had a squeeze, and we rallied up. Then we stomped down. Bollinger Bands have widened. We've come in again, a bit of a nip there. Then we've moved down, and they may be squeezing again now. So we're back over here on the 1 hour time frame. Strong candle currently. Can't really see that MACD very much, but the MACD signal line is sort of looping up and down. So it's still edging lower potentially, but it's really sideways action for the euro. 104 is key support here on this 1 hour, and the 1 hour 20 line sits there at where are we? That's I'm looking at I'm trying to find the Bollinger Band. Yeah, 104.24. So 104.25, another round number, and then the top of the Bollinger Band today, intraday, sits at 104.70. So there are your two upside targets. Downside support is 104 itself, and the bottom of the Bollinger Band as it comes in now, 103.85 on the euro, Daniel, with that mixed to weak. I'll give you elbow cough. I'll see you after school, young man. Okay, my friend. Good afternoon to you. Good evening. Hope you're well. Good afternoon, Frederick. Hello. Hope you're well. Dan Flower says, "Is there a signal group to follow and pick trade ideas?" Dan, favor. There's always signal groups. There's hundreds of them, if not thousands of them. But learn to do this yourself, my friend. Find a strategy that works for you. Find a time frame that works for you, that fits your personality. Trading is all about psychology. 90% of this business is understanding yourself. If you don't understand yourself, stop now. The market will take your money off you. That's what it does really, really well. It's just a great money gobbling machine. It spits a bit out every now and again, and you want to take a bit of that money that it spits out. So understand yourself, Dan. But yeah, if you want to follow somebody else, fine. But have a think about this. You're following signals. You're following somebody else. Even if you will learn something. But really, at the end of the day, when that signal stops, because they always do, they make enough money and they go away and they disappear. What have you learned? Markets haven't changed for 100 odd years. But learn to understand what's going on. Understand yourself first and foremost, and then you can move forward with confidence and consistency, because that's what this business is all about, my friend. But yes, if you want signal groups, join our trade signal group. Good evening, sir. Daniel from Nigeria. I'm very busy. Will this be recorded? It will be recorded. It'll be put up as a post. I think Andrew's going to post it on our HF Markets analysis post, so you can watch it there later. Let me know about the white background on the charts as well, guys. That's the other thing, because we've changed from our default black. I'm just testing them today, basically. Okay, so stay safe, Daniel. Have a good rest of the day, and love to everyone in Nigeria. Berlin, thoughts on gold? Well, gold's not doing anything, basically. Gold, I'll bring the chart up in a minute, but actually, no, let's bring the chart. Gold is getting pulled both ways. One, it's a safe haven asset, so you'd expect it to go up. Two, on the flip side, it doesn't generate any interest or any yield. So as yields go up, which they have done, the 10-year yield in the US is now at 3.45 last time I looked, or 3.44.71. It doesn't generate any yield, so that puts pressure on the gold price. And as interest rates go up, it puts pressure on gold as well. The flip side is it's a safe haven asset, so as markets and risky markets like stocks and other things like cryptos tend to sell off, people will move into gold. What we can see in the chart, this isn't the gold chart, sorry, is the is a really sideways action. So let me just grab my. It's my mouse is not working. This is the gold. This is the weekly chart, Berlin. As you can see, that's as a trend following trader. That's not getting anything to get excited about. We're sort of channeling sideways. So the lines on this is the weekly. So let's so you can see here we're sort of sideways. So our top here is 1900 on our weekly channel. We've burst it. We have been out of it during March. Obviously, it took us to 2000. Let me just put 2000 on here. Took us up to beyond the 2000 level up here. But that's a key top. So 2000, big stretch from where we are at the moment. 1900, still quite a big stretch. We come down the times, as you can see, there's some key levels that are key. 1850 is our key pivot. We come all the way down to the intraday basis. Let me just put 1850 on here. It's not actually on this chart. And even that sits at the top of where we are now. So 1850, I'll zoom in a wee bit. It's been a bit of a stretch this week. We've got the 4 hour. There's the 1850 pivot since the beginning of sort of middle of May, really. We've been pivoting around that. Can't get any higher. Can't get over 1875, but equally, we don't really want to blow 1830. Below 1830 sits obviously 1800 itself, and 1788. This is 1793, but 1788 is the key area. So a busy, quite a volatile movement, obviously, with what the central banks have been showing us this week. So up we went to 1875. We came all the way down here to 1800 earlier in the week. Here, that's 1806. Let's bring that down to the around 1800 down around about there. So we're 1805 on the intraday chart here. There it is. So there we are. 1805 is here. And we've sort of rallied from that yesterday. We were up and on obviously the Fed announcement yesterday, and then we moved higher into close, and then we've sort of topped out that 1830 level. That's the level I was talking about. 1830 is around about where we are now. It is sort of the top resistance really today, and that's where the 20-hour sits. Above that today is the top of the Bollinger Band there at 1840 or 1839. Up 30, 1839, 30, top of the Bollinger Band, let's be fair. But we are, angling higher. We're ticking a bit higher from yesterday to today. But we had a move down, and now we're moving back up into the US Open on that weaker dollar and that weaker US data. So 1830, break that. Next target would be 1839.29 intraday today, Berlin, my friend. But as I say, on the higher time frame, I'm not excited about the gold market at all. It moved down quite nicely during the second half of April and May, and then we've just been really channeling sideways. There we see that 1875 top. There's my 1830 floor, which we burst out through a couple of days, and 1800, 1805 support zone down here. It needs to break that level if it's going to go anywhere. Okay. Kyle, VIX. I asked about the VIX. I haven't looked at the VIX for a while. Let me just bring up the file, new chart, index, because I know I haven't got it on here. Indices, smart, VIX. How's the VIX gone? Isn't the VIX on here? Hello? There it is. And put the same template on this, which is. That's a very good question. What the template is. It's my, I called it new. I think I called it new HFM. There we are. Okay. So, zoom out, no, zoom in, and move down. There we go. So, VIX 35 was attempted this week, wasn't it? No, 34. In fact, sorry, not 35, 34. But generally, again, very volatile. Remember what the VIX is, guys. The VIX is the measure of the volatility of the futures market of the S&P 500. It's very closely correlated. This is the real chart, guys. It's not a made up one like lots of other brokers have. So be very careful when you're trading volatility indexes with other brokers, because they're markets that are really sort of created by the broker. So here we got triple top here around that 34 level. We're bouncing into it again this week, but coming back down. So as with the stock markets themselves, you can see, I don't know, I'm drawn here. Can I? Let me see if I can draw a line. So we've got our down line, our up line or down line. You can't see that, can you? Because it's all white. But anyway, you can see we've had quite a zigzag move, but again biased to the upside from this middle of sort of from all the year basically. As the let me just put that on. Sorry, I'll change the color. No, object. Let me change those. That green, that blue, because you can't see it very well, can you? Let's make those. Oops. Right, here you go. So we can see this. This is the going back to the end of last year, and we, the panic has been going up as the stock market's been going down. So 35 here or 34 has been our high, and we're coming back down this week. So talk of let me move that down a bit there. Sort of around about there. In fact, that should be a bit wider because that's breaking some. That's a wee bit. No, it's not brilliant, but not rising wedge. You can see the bias is to the downside as the stock markets continue to pressure. So I don't know how you're trading this, Kai, but intraday. There's our 34 from earlier in the week. We've moved down quite significantly, rallied up today, and we sit at a resistance at 32, I'd say, just above there, at the top of the. There we are, top of the Bollinger Band now. It sits at 31.88. Well, let's call it 32 for a target level. And it's sort of stalled before there at 31.37, currently ahead of market on. But see the gap down on open, so a bit of bid for equity markets as the VIA index fell today into what was our low today? 29. So we fell into 29. We've rallied over 31. We're stalling at the moment at 31.35. Our resistance is now rising with the top of the Bollinger Band, 31.85 at the moment. So that's waiting basically on what it's going to do next. It's popped out the side of the Bollinger Band and now it's consolidating. So it's either going to go to test the outside of the Bollinger Band again. But we're still, interestingly, this is yesterday's high where we can't get to. By the Bollinger Band, I don't see 31.84. That's yesterday's opening high. And then we collapsed yesterday, which is the bottom of where we were the day before. So we've had a rally here. Stocks fell. We've consolidated up here between 34 and 32, and now we've dropped to 29 and bounced off that. So it's waiting for some direction, Carl, intraday. If you're trading us on a higher time frame, do let me know. Lots of questions, right, Virgil? Gold, we just looked at, Virgil. Sterling, we haven't talked about. I say the Bank of England, somewhat disappointing, I would argue. But look, obviously, also in the UK, we've got some unique characteristics as well. We've got pressure on the Prime Minister, political pressure. It doesn't necessarily impact the sterling immediately, but his self-appointed, the Prime Minister's self-appointed ethics minister, he wasn't a minister, that's not correct, advisor. So he's his personal advisor. It's the second one he's lost within 3 years. Has resigned today, having said he wasn't going to resign just earlier in the week on Tuesday and Wednesday. He's resigned today. You just can't continue. Odious was a word he used, a very, very old style English word, odious. Look it up if you don't know what it means. But he found it very difficult to continue as the Prime Minister's ethics advisor. Let's put a line in there. There's a zero line on that too. You can't see that very well. So Sterling, big moves again. Again, I'm put the numbers on this chart, but 120 has been breached today or yesterday. There's 119.95. There's 120 there. And we're back to over 121 and 122 at the moment. But 120, big round number. 122's there. there we go, 122. We've spiked back up on the weaker US data today. So we're in the top half intraday. We are in the top half of the Bollinger Band on this 1 hour time frame. It's moving up. Signal line sort of stopped falling. RSI has moved into an overbought situation. Remember, these are RSI 7 now, not normal 14. So it's popped out. It may be a wee bit overbought here, as we're saying here on the RSI. So we may see some cooling here, but we have breached 122. But if we, it's 122, there we are. If we go to the higher time frame, Virgil, you can see the big trend remains very much in place. A big move down, and sterling continues to remain pressured. Sterling's moved up on anticipating the Bank of England. Bank of England did deliver. It's its fourth. I think it's its fourth consecutive move up, isn't it? Yeah, 6.3 voted for the 25 basis points, so we're at a 13-year high for UK interest rates. So many people will start to feel the impact on their mortgages as well, as we are at 1.25% now for the UK. But many were anticipating this is not the strong signal that they're going to deal with prices. So prices rising, as I said earlier, 11% the Bank of England expect. They cut growth, and that continues to pressure sterling. So 120, big psychological support level. But so was 125, and we didn't hang around at 125 for very long. Historically, 125 for cable is another one of those big numbers. It was a key number in the Brexit period, and we sort of trundled through that yesterday and today. That's 125.20. It's a bit high, but you get my point, hopefully. It remains big 500 pip move in the last few days as we went down up to test under 120. And as I say, this is the daily time frame, so it remains very weak. 4 hour also weak. Big sell off this week. We're back over the midpoint of the Bollinger Band. So for 4 hour traders, your support sits there at 20 period moving average, which sits at 121.15. It's only one candle through there now, but quite significantly and over 122. So 4 hour traders can see top of the Bollinger Band at 122.65. Again, intraday, we are sort of trending higher, aren't we? 4 hours traders as our wick support. Terrible draw trend lines, but there we go. That's the support as we go forward. Top of that channel would be not today. That's sort of level, isn't it? Going up. So break of that. Is that a rising wedge? Same terrible draw of that. But 4 hours. That's your upward channel so far, having had a really steep decline. So the decline was perhaps a bit overdone, but as you can see, the RSI is rising nicely with it here, but we're moving into that overbought area. Signal line starting to turn up as well here in the big move down from our Bollinger Bands, but you can see how we came in there. Now it's got some buyers down here, back over the midline of the Bollinger Band and moving back up. We might see some tightening of the Bollinger Bands, but that's still rising on the 4 hour. And the 1 hour, there's our 4 hour channel on the 1 hour chart. Still ticking high, and we're out again, but pushing out of the Bollinger. So again, moving higher. RSI sort of positive. We're moving into overbought on the RSI at 7 count back. So relatively to the upside. Virgil, I did gold before, so hope you got gold. Can I talk to you through WhatsApp, please? I need to talk to you for mentorship. Daniel, contact me on Facebook, Stuart Cowell. Find me on Facebook, Stuart, Stuart Cowell, Cowell. And certainly we're putting some WhatsApp groups together, Daniel. I don't know where you're based, but certainly come and follow us. Daniel, watch. I don't do mentorship. I work for HFM. But, as I say, I'm happy to talk to anybody, honestly. And if you're willing to learn, you're willing to put the time and effort in, I'm happy to help you. So get in touch. We can speak on Messenger, we can speak on WhatsApp, and we can take you there forward, my friend. Mohammed, Hamid, sorry. Are you talking to somebody else, Hamid? All right, okay. Zefel, hello. Yen. Well, yen's come back today on anticipation that the Bank of Japan might act tomorrow, given what's happened with the rest of the world. Obviously, they can't act in isolation, but at the moment, the rhetoric from Japan is that we are watching the forex market. The weak yen isn't great. This is the daily market, Muna, and there's that 135, that record high we've got to 135.50, that top yesterday and the day before. There we are, 135.50 up there. And again, I'm sure you're well aware. If we zoom this in, look at this on the daily. It's just massive breakout from earlier in the year. This is February sideways channel, and just a massive rally. A bit of a pullback here in May, and then we breached these previous highs in June and just gone mental to the upside. So how long the Bank of Japan will continue with this rhetoric of a very strong competitive policy? We want inflation to come back. It needs to come back. But big rally, obviously. And then today, it started to cool as the market's trying to anticipate that the Bank of Japan may have to act tomorrow overnight. So watch that one. Anyway, as Moon is asking, as Kel's asking as well. Alec is asking about the impact of interest rates. Well, this is what we're talking about now. The other key thing is not just the interest rates, is yield differentials. Because the yields between the Japan and the US are huge now. As I said before, the 10-year in the US yield this morning, last time I looked, was over 3%, significantly over 3%, 3.44. So heading for 3.5%. And the yields in the US and Japan are much lower. So lots of money flowing to the dollar from the yen, and that's why we've had this massive rally. I don't know what time frame you're trading this, but this is a daily chart. So what's happened? Well, we've had a rapid rise in June, huge pips, lots of profit in this rally here. There's our support now. That's our resistance going at that 131 area. It's 130.88 actually, the blue line here, but 131 is the support as this now starts to sell off. So if that indeed falls down as rapidly as it's rallied, we shall see. Again, markets might be getting ahead of themselves. The Bank of Japan might stay punt, and we go back through 135 higher. Interestingly, 135.50, we're 150 pips above the key weekly resistance, which sat at 134, which was a big target level. I got the weekly. Let me just put in the 134 level, and you'll see hopefully you'll see what I'm talking about. 134, around about there. 134, 134. That was close enough. Right, so that blue line here is a 134 level. If we zoom this in on the weekly, we can see why that was such a key resistance. So here we are. We're back. The chart to the left now takes us back to 2013. We keep zooming in, and we look at this 134 level here. It takes us all the way back. Oh, it's still off the chart. So I thought it was. So the 134 is this middle one here, and it takes us all the way back here, this 20-year to 2001. So the 135, the top blue line here, that's where we are now. So it's a key. If I can zoom up, it's still. If I take that, you should be able to see it. There we are. That's where we are now. So this here, guys, we're back to 2001. Do the maths. It's a 20-year high here for dollar yen at this 134 level, and then the top line, remember, 135.50, and that's where we were right at the middle of 2001. So key level was 134. We've breached that, and now we're over the 135 level. So there may be some cooling from that. As you can see on this weekly chart, zoom that in. What a strong, weekly rally that is. But it's, you'd argue that's very steep, isn't it? That rally during this sort of second quarter has been very significant. 3 weeks down, but then bang, these last 2 weeks have been absolutely huge. So it remains bid. 135's key. Next move, all down to what the Bank of Japan say overnight tomorrow. And what we've seen yesterday and so far today is a cooling from that 135.50 through 134. So a big 150 pip drop. And then we've fallen again today ahead of US Open with the weaker US data, and 132.70. So moving lower on the intraday time frame. 4 hour broke under here, down and broke that 134, and that's moved down as well. So cooling of the big rally. MACD on the 4 hour, the signal line's been descending for quite a while. There we go, a bit of divergence here on your MACD. As you go, there's the MACD falling. Prices were still sort of rising, weren't they? There we go, nice divergence there. So when it comes, it doesn't happen that often. When it does, it can be quite significant. And so we've started to descend, really. We're still going up there, and that was falling. There's our divergence there. Although, to be fair, that was through there, wasn't it? It was flat. Even, there was some suggestion there that 4 hour, there's that flat level. See on the price action here, and divergence was already in place here from sort of earlier last week, June 7th through to the 8th. Anyway, I didn't mean to put that line in there. Let's just get rid of that one. Anyway, we'll leave that 134.50 on. So I'll just put that line there. Didn't mean to do that. But so rolling over, and I say the 1 hour, quite a significant fall from this range in today, based on action from the other central banks. So the big surprise for the Bank of Japan was the Central Bank of Switzerland here at 10 o'clock this morning. Huge move down for dollar yen on the back of action from the Swiss National Bank. So that's dollar yen. Dan, happy to do that. Contact me on Facebook. Happy to help. That's what we're here for. Kel, Alec, dollar yen impact of interest rates. Well, there we go. I hope I've explained that at the beginning, and watch the beginning of the video if you weren't here. But it's certainly a big surprise. Certainly the Swiss National Bank, Bank of England have sort of done what the market was expecting, but some were expecting a bit more of an aggressive talk. David, good evening. Hope you're best and staying well. With interest rate hiking, which currencies are more profitable? That's right. Right, the logic would say, wouldn't it? In an interest rate hiking cycle, you go with the currency whose interest rate's going up because you're getting more for your money. So that is why we've had a strong rally in the dollar. So let's have a look at the dollar index. But it's all anticipation. You've got to remember, with big traders, the players, the banks, they're looking much further ahead than we are as retail traders. So the bid on the dollar, so dollar index. Remember, it's not an ideal model for the strength of the dollar, but it's one of the better ones we've got, because it's only 6 currencies in the dollar index basket, and the euro accounts for about 54% of that weighting. So it's very high bias towards the dollar, towards the euro, I should say. So, but anyway, the point is, we've been anticipating rising rates from the Fed for quite a while now, which is why the dollar has been rallying, particularly in, here we are, we broke out here. This is taking, where's that? That's February, isn't it? It's not March, April, May, June. Yeah, so a very strong spring for the dollar. But where do we go from here? Well, they've pushed interest rates or higher quicker, 75 basis points, so they're going to go higher. So potentially we've broken out from dollar index and it's gone higher. So traditionally, obviously, the anticipation of interest rate hikes tend to move the currency further than the actual interest rate cycle. Ironically, when the numbers start coming out, when the central banks start doing it, currencies can start to cool. But they've surprised with 75 basis points on Wednesday, the Fed anyway, and certainly the Swiss National Bank have today. So that's pushed the currencies higher. So like the Swiss franc moved over 2% today. But typically, they do what's anticipated, a bit like the Central Bank of England did, the Bank of England today. And so therefore the currency can start to cool once interest rate cycle starts. So don't try and second guess central banks or second guess any market, David. Have a strategy, understand a bit about the fundamentals. Don't get too sort of bogged down trying to understand every little nuance and comment by every single central banker. The players the main players are obviously the chairs and the central governors, people like Lagarde and Powell and Bailey in the United Kingdom, Kuroda in Japan. Um, the others obviously are quite important as well, but they're the main players. So other members to watch. But generally, have a system, have a strategy, and follow the trends. The dollar is bid, it's going up. Euro is under pressure, it's going down. It's rallied a few days, but that's a trend that's been in place for a while. Cable against the dollar. Again, has been moving down on a high on the daily time phase basis. 125, 120 key levels. We may, this rally may take us back to 125, but have a system, have a strategy. Don't try and second guess the markets, my friend. Okay, I hope that's answered your question. Sim, hi AJ. Hello AJ. I don't know who AJ is. Good morning, good afternoon. Daniel, how can I become good in my fundamental? I don't know when is the news. I just lost euro pound. I go long at 85.66. It reversed on me, please. So how can I check if there is news? I'm good in technical analysis. Daniel, well, the argument, if you're good in technical analysis, the news shouldn't move you. However, you do need to be aware of news. Again, Daniel, it depends on how you're trading. If you're trading intraday, Daniel, you do need to know what the news is. So always have your calendar next to you. So we've got a pretty strong, detailed calendar. You can add and take off things. I don't know if I can share it with you. Can I? I don't know. I think I'm only sharing. No, I'm only sharing my. Let's see if I can do that. Let me just. Share the window. I can share the calendar. There we go. Where have I gone? Oh no, I'm behind it. I'm behind your comment. So always, this is our calendar, Daniel. So always have the. Obviously, this needs setting up. There's a lot of everything in, but you can obviously filter it accordingly. So the big red impact events are the ones that are really going to move markets. So there's the interest rate decision from the Bank of Japan tomorrow, 0.1% expected. So have that on. Hang on a minute. What's the markets? There we are. So have that on. Have your calendar with you, and to see where the news might go. You went long at 85.66. Well, let's have a look at again. I don't know what time frame you're trading this, but it's been very volatile. Euro pound. It was down below 80. 84, 85. It's been extremely volatile because of the news that's been coming out from both sides of the English Channel. So big moves. So again, I don't know what time frame you're trading on, Daniel, but generally, this is my old black chart. Sorry about that. I was trying to use white charts to do, but anyway, let's use this one. If we look at the daily, you can see it's generally angling higher, isn't it? It's been trending higher. Euro's been up here against the. That's a blue line. You can't see that on the black background. Up against the euro here. So we're all the way down here at 80, 82, 85, 50, but it's been moving up in a higher time frame. So if we this is a 1 hour time frame. No wonder. Well, depends on how you've been trading it. But if you've been using this strategy, nothing's fail safe. This would have taken you long here, and you'd have stayed long using this strategy here, Daniel. Up here, and you would have got out then. So nice big profit you've taken on there. Okay. You might have been a bit aggressive, tried to go long there and got taken out there. You might have gone long there because we were above here. Yeah, and then it's gone short here, so that's a big short. So that's a nice big short. You would have come out just today. So again, you would have got in using this crossing strategy there. You would have got in there, that blue line there, and you would have got out earlier on today there. So that would have been your profit on that one. The profit up would have been from here to here on that one. I'm not going to mark it on, but you can see what I'm saying. You can see. So that would have been your entry here on the 1 hour, and you would have got out there. There you would have got that and that. Then what would have happened? Well, you would have gone long I might have even gone long here because it's flat because it's still supporting. But then it's gone. The news this morning has stopped you out, so it's a very volatile day for this pair. But again, 86 is a big high line in the sand for the euro pound. But that is short. I don't know what you went long at 85.66, so 85. Yeah, 85. That might mean that, but yes, that would have. What did I say? What that would have been short. What did I say? Short there, and then out here as it's gone back over the yellow. I might have gone long there and got stopped out as we've gone short. But this is short now on this strategy. Obviously, if your stop loss had been hit, it would have taken you out. But that remains short. I don't know what that's our daily blue line there, isn't it? So let me just change the template. I'm going to go back to the one we've been using today for this one. But the chart looks the same. So again, in the under half of the Bollinger Band, up and out, big volatile. So yeah, no wonder people have been stopped. I wouldn't worry too much about being stopped out on that one, Daniel, because hopefully you've got these two big moves, and that this losing trade here is just one of those things. I say, as far as fundamentals, don't get too hung about it. A lot of this was to do with political news this morning that you'd be aware of about the UK Prime Minister. Sorry, that was yesterday, earlier in the week. And then we've Euro News has brought Euro Pound down. But it mightn't even be in the news. It might have just been some comments. Bank of England, generally disappointing. But the sterling, as we saw, has benefited from it. So initial weakness here at 2 o'clock when the news came out. We went all the way to 86.33, and then sterling's turned around since then. So, when the central banks are speaking, Daniel, that's the most important. So they're the big red impact events. So if you've got any exposure to the yen, be well aware, be obviously aware of what the Bank of Japan may be saying tomorrow. Okay. Daniel, drop me an email at webinars@hfm.com, and I'll give you a longer written answer, okay, about fundamental analysis. But again, come onto our website and have a look at our webinars on fundamental analysis as well. Dixie, what's that saying, Kyle? How low do you think it's going to go? Is it going? And can you give me your thought? And again, please, of course, let's have a look at it, Dixie. Lambert, I'll come to the carry trade. Very much in play, very much in play with these interest rate moves. But more on that in a minute, Lambert. I'm done for you. Dollar index, Kyle saying, how low will it go? Well, this is dollar index on the daily basis, and that still is big. We've come back from 105. We're at 104.20 on the higher time frames. I'd have to say my support. I think I did this on this other chart, didn't I? Support is through there, which is halfway between where we are now and the 20-day moving average at 103.50 or 103.60. That resistance is where we're going up. It's probably a wee bit higher than that. It's not supposed to think, right, okay. And let's zoom that up. So immediately, so that's our sort of lip. If you were doing your little Fibonacci, which was the member of our webinar today, let me just change the colour on that so you can see the Fibonacci levels. That's the last leg on the Fibonacci rally. So the 61. Oh, dearie me. The trouble is using object list of using different coloured charts. The default colours need to change. So let me just change that so you can change that as well. Let me just make that a darker colour. Midnight blue. And oh, sorry. I need to change that to blue as well. Midnight blue. Okay. Hopefully you can see that. There we go. You can see the Fibonacci level of this rally here from this low down here at 101.25 at the end of May to our current high around about 105.25. So we've cooled off. The key support is the 61.8 fib level, which coincides with the 20-day moving average, which is what we said before. So 102.80 is the support, Kyle, on an end of day basis. First support, as I put in with my eye, remember, that 103.75 also coincides with the 38.2 fib level, which is that resistance here as we were going up. It was relentless going up, wasn't it? We couldn't get over it. Then we were over it. Then we went down it. So this is a key little window here. So that's your key support, 103.75, then 102.80. But, still got some way to go before we get down to there. So that's your potential targets to the downside. It may, of course, turn around and find some support through this recent resistance high as well. You can see that was a struggle to get higher, wasn't it, through there? So sort of where we are now as well, which is halfway between the 23 and the 38 fib level there at 104. So 104 is the immediate psychological support for dollar index, Kyle, my friend. Where are we? That was Kyle. I've lost him. There we go. There's lots of you in here. Lambert, what about the yen carry trade? Absolutely. If you don't know what a carry trade is, guys, if you're new to trading, carry trade is something that big players play. They hold positions for months, if not years sometimes. And we've had this massive play on the yen, on the interest rate differentials, on the difference in the yields, and hence the dollar yen massively weakening, as we saw earlier. Kiwi yen is another key carry trade pair. See what happens tomorrow, Lambert. Be careful about opening any new positions. See what the Bank of Japan, in unison with the finance ministry at the bank in Japan as well, are very much somebody's asking about what. I'll come back to that in a Ricardo. In unison with the government in Japan and have been for a while. So I don't know where you got positions open, but certainly that's been one of the trades of the year, the carry trade on the insistence of accommodative policy with the Bank of Japan and the central government in Japan as well. So that's still very much in play. Ricardo, what's my Facebook name? Let me just look for Stuart Cowell. Okay, look, the HFM one, not my personal one. I won't respond to my personal one. Okay, so, look for Stuart Cowell, the HFM one, and we can chat on Messenger and stuff like that. So send me a request, and we'll take it from there, Ricardo. Okay. Oh, that's answered your question. Elk, no problem. That's what I'm here for. I charge my trader, please. Since I'm trading, I've been making mistakes, but I will not give up. So I need your help, Daniel. That's not a problem. Don't give up. If you trading, guys. This goes to everyone, not just Daniel. Trading is very much, as I said at the beginning, a psychological business. Okay, so you've got to accept that you'll lose. You'll lose much more than you anticipate you will. You'll win more than you think you will as well. So don't get too beaten up. Okay. The issue with trading is you will have a lot of losing trades. That's what your psychology can't deal with, because we're not taught to lose at school or at university or by our parents, are we? Whereas in trading, you can still lose a lot. Up to 50% of your trades can go wrong, but you can still make money. Getting 5 out of 10 in a maths test at school is terrible, isn't it? Teacher would beat you up. Your parents would beat you up. But in this crazy business, you can still make money simply by keeping your losing trade, or the 5 that you lose, if you keep them small, and the 5 that you win are a bit bigger than the ones that you lose, you make money. It's as simple as that. It really is as simple as that. The trouble is, 90% of traders do it the other way around. They'll lose twice as much as they will win, and they're out of business very, very quickly. So, Daniel, if there's one thing you learn, it's to keep your losing trade small and just accept it. Okay, we all make mistakes. We continue to make mistakes. I make mistakes every single day of the year. It's just what life's like, isn't it? Whatever we do, whether we're trading or not, and trading, just especially if you're doing it sort of on an intraday basis, just sort of compresses everything. It compresses your emotions. It compresses that fear and greed. It compresses the, the sweaty palms, the beating heart, and the short breath. But have a system. Find out about yourself first. What's the best time frame to trade? Markets are just markets. It doesn't matter what it is. I always say that that's just an asset. It's just a chart to me. For me, I don't care what it is. It happens to be it happens to be the dollar yen. But for me, that's a chart that's broken out of a lot. It's not done anything. It's boring as buggery here for months and months and months. And then all of a sudden it erupts, and that's one thing you learn. The longer markets go sideways, the bigger the eruption can be, whether it's going down or going up. I don't care. I'm a trend follower, so I'll be on this like a rat up a drain pipe, as we say in England. It rallied, massive 2 month rally. Look at all that nonsense going on. It's not biased higher, isn't it, a bit? But, huge breakout, and so you start scaling in as it starts to break out, and it's still going up, That's what you're going to learn, Daniel, and everybody else for that matter. Learn to understand yourself. I say it all the time. Watch my risk management mindset webinar. Because it's all about simple numbers. If you keep your losing trades small, you stay in business. And that's really what it's all about. Why aren't I on? There we are. I don't know if you could hear me now. My picture wasn't on. But anyway, I'm back now. So there we go. It is divine wisdom and mystery to what moves these prices. It's not divine wisdom and mystery, Le Bon. Markets do what markets do. They go up, they go down, they go sideways. That's all they do. You just have a system that either trades the trend, like this one, there, or, you might be a channel trader that likes to get in and out, and he's counting. He's short at the top here, and he's long at the bottom, so he's in and out all the time here. For me, as a trend-following trader, if I zoom this up, I'll go back. Sorry. Oh dear. As a trend-following trade, that wasn't doing anything for me. It started to get interesting sort of around about here, this 115 level dollar yen, when it started to break out. And that was the key one on an end-of-day basis, where we start to break out of these highs here. So that high was higher than that high back in November. But you've got to have patience. And this took us all the way to, what was that? It was February, wasn't it? But beginning, I can't remember. But there we go, 115, 115, 116. Once we broke 116, it's hello. And off we go. And here we are, 135.50 has been the peak. Obviously, you don't get all of this rally, but certainly that's a big rally. That's a rally, retrace, rally to new highs. No more buyers currently at 135.50. It had to run out at some point. The Bank of Japan will have to act at some point. The government of Japan will have to act at some point. They can't let the yen weakened so much. It's a massive, massive move. Look at how much is that as a percentage. Work it out, guys. We've gone from a sort of a 115 to 135. Percentage move, that's huge in currency terms. So Japan is a huge trading nation, massive exports of their cars, their electronics, their electrical equipment, and everything else the Japanese do very, very well. Good for their tourism, the weaker yen. But there have been very, very strict lockdowns, and it's a long way to go for many markets, certainly in Europe and the United States. But Asian markets, tourism starting to take up. Get to Japan because the yen's weakened. So it's but their exports, their manufacturing, their service exports, much more significant perhaps than their tourism business. But anyway, I get off the point. The point is, trends, trade what works for you. And at the moment, we've seen a 2-day rollover. Even with the Fed going to 75 basis points, that the Bank of Japan may act. That's why we've got this decline in the dollar yen the last couple of days. Good afternoon, Mohammed. Hope you're well, staying safe. We're here to help, my friend. My Skype messages popping up all the time here, so it's going to... Do you use CSI and RSI? I don't use CSI, but I do use RSI. It's not actually on here. This is what the one down here, Ricardo. This is RSI, but it's set at 7. Normally it defaults to 14. I don't know if you can see that, but 7 you get a bit more. It's obviously more spiky. So here, if you're just using RSI here has gone from went all the way to 90.70. You know, if I was using it at 7, I might raise this 70 level to 80 or something. But certainly, you don't want to look to. So that, from an RSI point of view, Ricardo, here this particular chart on this particular time frame is saying short, or go short on the big down trend, big down day. Just the RSI. But yeah, RSI is a great indicator. I've got a webinar on it, I think, before the end of the month, or somebody has. I can't remember. But there are, again, watch our past webinar sites. We've got webinars on all the major indicators and some of the less known indicators. Next week, I've got a webinar on the CCI, Commodity Channel Index, a different type of oscillator. I did one yesterday on the MACD, but have a look at them. I hope you can learn some. But yeah, RSI, very, very popular. I like it. It tends to be on most of my charts, most of the templates. So if you see I've changed the template, anyway, it does. Just take my word for it. Okay. The bong. I'm getting a bit tired now, guys. I've been here an hour or so. But anyway, I'll keep going as you keep asking. I believe it is always advisable to know your counterpart. Absolutely. Well, yes. Obviously, know who you're dealing with. Know what your who you're dealing with. It's like anything in life. You know, you got to trust the other party. The beer gang. If you don't, walk away. You know, there's plenty of other people around. You know, we do our best, guys. We're not infallible. There's lots and lots of brokers, and you know, I'd say go and try them out. You know, we're a lot better than most brokers. We're not. You know, we make our own mistakes, get things wrong time to time. Of course, we do. Just like anything in life, but we do our best, and we're honest, we're open, we're transparent, and we're here for you whenever you want us. So, best of luck, my friend. AJ equal to Aussie yen. Are you asking about Aussie yen? Aussie yen is a great, as SM has put on here. I don't know if you're responding to somebody else on here, SM, but the Aussie yen is probably the best asset or the best indicator of Asian sentiment. Okay. The Aussie is very much a commodity currency. The yen is very much a safe haven currency. It's the major credit currency of the world. We've got a very stable political system in Japan. We've got a very stable economy, although it's been stagnating for a long time. The yen is still the key one of the key, probably one of the key credit currencies in the world. So, as we can see here on the weekly chart, the yen has been weakening. The Aussie, this is again another weaker yen story rather than a stronger. But just like we saw with the dollar yen, key breakout was at this 86 level or 85.75 on the weekly basis. So 85 on the daily basis. If I come down to the daily basis, 85 was a key breakout level. I remember for the Aussie yen here on the daily basis, 85 on there. It's just a wee bit below. Was the major blowout resistance, and again just trekking it higher, rallied all the way to 96, cooled quite significantly. Pressure on the Aussie. There was the elections. Yen came back in focus. Then we've broken out again for the end of May, beginning of June. Then it's rolled over as we've got over 95. So 95, 96. There's 95 for the Aussie. It's just about there. There we go. That was a resistance. Broke it, got high, but it didn't want to go much higher. And then 96.25, I think was about the top, wasn't it? 96.30, something like that. 96.50, in fact, was our top so far. So we've rolled over again on that one. So as far as, again, with our little fib level, sort of, there we go. Our next support for Aussie, as we've broken, if this holds, this is on the daily, so I can't make a decision, or you shouldn't be making a decision on today's candle because it obviously hasn't complete. So yesterday, or early in the week, we bounced into the 20-day moving average and we bounced off it. So it depends where we close today is key. So we've got, I can zoom that up. So on an end of day basis, we've got the 38.2 fib level, coinciding with the 20-day moving average here at 92.85, 92.87, 88 coming up here. But today we're breaking lower. So this could be a key break lower for Aussie yen. If this yen continues to improve. Remember, we've got the key thing tomorrow is the in the next few, literally in the next few trading hours. So it's overnight. So this could be a move that sort of stalls as we get down here. So if it's going to move lower, it's got to move. It's got to close below the 20-day moving average and the 38.2. It may not yet, but it looks like it's going to at the moment, doesn't it? At 92.50. And then the next resistance would be 91.90, and then the 61.8, which would be 90.70 or 90.80, 90.80. There would be targets, initial targets potentially to the downside for short traders. Short traders, not short traders, traders that are short, not necessarily small, but people that are going against this pair. But generally, Aussie against the yen has followed the other weakness yen pair, so we're moving up. As far as today's concerned, you've probably gone short earlier. There's the daily time frames, there's those channels we talked about earlier. There's those fib levels on the daily time frame, so it's breached that, moving lower, and there's that 50 fib 91.88. You know, big widening. See how the Bollinger Bands have widened? They nipped in here. Big move down, break of the midpoint there on the hourly chart, and you've been short ever since. It's sort of run out of steam a wee bit. It's bounced a wee bit. MACD's gone negative. RSI collapsed really quickly, but it's looking like it's likely to bounce up. So it's finding a bit of support today at 92.30, having broke yesterday's low at what was that, 92.40. So yeah, so there's yesterday's low, 92.30. So we're out of that at the moment and bounced off that 92.30.40. We're back at that level. So still moving to the downside. I don't know what time frame you wanted to SMM, but certainly. Mohammed, please next week explain CCI. I will, Mohammed. I think it's next week. Have a look on our website. I'm certainly doing a CCI webinar, and I think it's certainly before the end of June. So I don't know if it's next week or the week after. But Ricardo, can you type the spelling? Ricardo, let me just put my name on again. Ricardo, quick screen grab, my friend. Cowell. Can you see that? Cowell, Stuart, Stuart, Cowell. Okay. Okay. Where are we? I've lost Mohammed. Mohammed is asking, please, my friend Daniel, work hard, please. Trading is the way. Mohammed, it can be. It's not for everybody, Mohammed, either. But anybody can trade. It's not an education thing. Certainly, it's not how bright you are. How many O levels you've got. I'm showing my age now. How many degrees you've got, or anything like that. It's about emotional intelligence. It's about understanding yourself. It's not about intellectual intelligence. A little bit of maths helps, pips and spread and understanding leverage and margin. They're absolutely fundamental, but anybody can learn to do that. Anybody can learn chart analysis. Anybody can learn a little bit of economics to have enough information to help you with trading. But too many bits on your chart. I mean, some people would say this chart is very cluttered, and I wouldn't argue with them, to be honest. There's 3 indicators down here. There's volume, there's Bollinger Bands, there's candlesticks, there's lines, there's support, resistance. All a bit cluttered. But, if it works for you. So find out what you want it to go. Kyle, VIX and the 15-minute and 5-minute for entry. Okay, fine. Yeah, that's the VIX, guys, as Kyle's saying here, it's a really good asset to trade simply because it moves around a lot. Remember, as a trader, you want something that moves. Let me just bring the VIX back up. Did I have the VIX on here? I can't remember if I did, didn't I? The VIX, guys, is just something that measures the amount of fiat in the market. Sorry, there we are, VIX. Oh. I thought I had a white. I thought I brought a white one up before. I did, didn't I? There we are. So the VIX, the volatility index, just measures the amount of fear and greed in the market. So Daniel, Kyle, if you're trading it intraday, that's brilliant. The 15-minute, again, I don't know what strategy you use, but they're 15-minute with this Bollinger Band strategy. It's sort of ticked. It would have ticked you higher here. Today it's been nice and high. Now it's what we saw before. It's sort of running out of steam, isn't it? So presumably, I don't know if you've been. I mean, your 5 minute might have been suggesting a bit of a sort of short here. Don't know if you've been catching that channel, but there we here as a 15 minute. So there's your channel top. So presumably, I'm putting words in your mouth here, Carl. I don't know. You tell me otherwise. You'll be looking for little pin bars at the top of these here. So there you go. You've gone a short here. You would have gone short there. Gone long here. Perhaps gone short there and got stopped out, but then got back in. I don't know. I don't know how you're trading that, but certainly the 5 minute chart is sort of sideways, very much sideways, but sort of biased to the upside because we're in the upper half. We're more in the upper half of the Bollinger Band than the lower half, aren't we? Even though it's not trending, it's not moving up, we're going sideways. However, what's happening in the last half an hour, as the market has opened, is that we're getting more volatility. So look how the Bollinger Bands are widening. The beak of the mouth of the bird is widening. But the upper Bollinger Band is going higher above where it's been today, and the bottom has gone wide as well, but it's turning up now as well. So we're biased a bit higher. I'm guessing you're catching that short at the top there. If we go up to your 50, if we go up to the 15 minute, that's just looking at the Bollinger Band. Now, I'm not looking at anything else here, but the MACD is sort of positive. RSI has been short as it's come down, but it doesn't want to come down a bit. So I would guess there's a bit of weakness in equity markets as the VIX continues to push at this 3150 level. And if we go to your 15 minute chart, you're still sort of there's a suggestion that we may have broken out of the channel that we identified earlier at 3150 on the open. You'd expect more action on the open. It's opening, the actual cash open. So again, it's still sort of biased. So the pressure's to the upside still, isn't it? So it may or may not move up from here. But you can see 3150 still a key level. Kyle, I hope your trading's going well. It sounds like somebody's trying to break in behind me. Who's next? Ricardo. Where do I find the webinar? On our website, my friend, HF Markets. I can't show you that, can I? HF.com, HFM.com, Ricardo. Can I draw on here? I should be able to, shouldn't I? How can I draw? I can't draw. HFM.com, Ricardo. Let me just insert scripts. What's my textbooks? Getting tired. I've forgotten what I'm doing now. Sorry, Ricardo. HFM.com, and then look under the education tab, Ricardo. If not, as we said, send me a Facebook message request and we can speak on Messenger. Okay, I'll help you out later on. Okay. Dorcas, what are your Bollinger Band settings? These are default ones, Dorcas. I'm saying here. Let me just check. Properties of Bollinger Bands. There we are. So it's standard 20. Can you see that? Standard 20 countback period and standard deviation set at 2. So it's a default setting, basically. If you want to play with it, play with it. Remember, John Bollinger, who invented Bollinger Bands, came up with this setting. So if you want to change it by all means. But remember, the guy who created it and still is talking about trading, johnbollinger.com. Said that way. Some people will extend the standard deviations to 3, so you get the extreme. The problem with that is, once you've gone 3 standard deviations from the mean, it can rally even more. It should reverse. I mean, the theory, John Bollinger, when he set it up, 96% of all price action takes place within the Bollinger Bands. But as you can see here, it sticks to the Bollinger extreme as well. So if you were just using it crudely to say, well, that's out of the Bollinger Band, it's going to reverse, it hasn't, has it? It's just kept going. Trade it and use it accordingly. Lots and lots of ways to trade with the Bollinger Bands, Dorcas. I hope you're getting the best out of them. I really like them. Something I've always really used. You can use them for trending. As you can see here, they've got nice angles. The distance, the depth, the width of the Bollinger Band, obviously the big candles cause big volatility. I really like the squeeze, when it comes in like this. That was something was going to happen. There we go. See how that's preempted the big move. We had some volatility here. 21. This was at the Fed last night, and then some more 5 minutes later, and then the big bang was down here, but then it bounced up again. So, I really like Bollinger Band stalkers. Again, if you want more information on them, there's lots of ways. We've got a double Bollinger Band technique where you add one standard deviation to the two standard deviations. Got the three standard deviations, or got some people like tweaking with it. I know a really well-respected trainer who uses like 1.95 for deviations. I think the assumption is he's getting in ahead of the crowd. But again, as with any asset, any indicator, use it with caution and never use it on its own. Henry Hobart natural gas. No, we don't have natural gas, Bogani. Where are we, Bogani? We haven't got natural gas. We did have natural gas. We withdrew it. There wasn't many requests for trading, but we don't have a natural gas asset. Maybe it will come back. Maybe we will take the Henry Hub asset. Who knows? Ricardo, yes to... good, you found it. I hope you have. Good. Is that the last comment? I think it is. Ricardo. Yeah, last comment. Okay. So obviously any more, keep them coming, guys. I don't know how many of you left here now, but keep coming. Let's have a quick review of where we are today. We've got, let's go back to the main markets. So, I'll go for the VIX. So, a massive day. We've had big surprise from the Swiss National Bank. It was probably the news of the day. A move of 50 basis points when the market wasn't expecting anything. Bank of England moved 25 basis points and the market was expecting that. So we've had a huge move in the Swissy in particular. Let me just bring the Swiss up as the asset of the day probably. Here. There we go. So we rallied here. And look at this big collapse here for dollar yen, dollar Swiss, 2% move. We'd gone over parity, i.e. 1-to-1, which is up here at the end, middle of May. We've done it again just this week, and it's turned around on a sixpence. And the big surprise from the Bank of Switzerland, and a huge 2% fall, but there we are. We're holding 97.20. Remember when I first came on, we were just under 98. So we continue to decline as I've been talking this afternoon. So 97.20 at the moment. And as you saw there on the daily time frame, that's the midpoint of the Bollinger. It's a key level where we are now, 97.20 for Swissy. I don't know. Again, I don't know how many trade the Swissy, but it's certainly the currency of the day with that big surprise from the Swiss National Bank. Bank of England also did what the market was expecting. We had a 25 basis point rise. UK rates have now moved in the last 5 consecutive meetings. We're at 1.25% for the Bank of England. We're at a 13-year high for UK interest rates. And the cable continues to recover here, and we're currently trading at 122.50. Out of our Bollinger Bands again, at the top of our channel we put in earlier today. I think it was on the 4 hour, wasn't it? So strong last 3 hours for cable from down here at 121 to 122.50. So strong few hours for cable. Big strong 4 hour candle here as well. Probably down, having broken over the midpoint of the Bollinger Band, and our 4 hour trend at top of the channel again. So cable moving up from these lows under 120, big lows, but the daily time frame remains weak. We've had 2 up days, but that still remains weak as far as I can see there. 120 has been support. Obviously buys at 120, and today 122. From that was that low as we came all the way down. Is now our support 122. If we're going to move back up to test the big psychological 125 as well for cable traders. Let's finish. We'll finish with Euro, as most of you will be trading the Euro. Oops. If my mouse will move, and I really am losing my voice, so I'm going to wrap this up in a minute. Where are we? We're at it's 3 o'clock London time, it's 5 o'clock server time. So Euro remains very, very weak as well. Although we've bounced from 104 in our third day up. Look at the size. This is daily, remember. Obviously, we can't say, but look how weak that bounce is in the last 3 days, including today, compared to the big 3 days down before. So it remains trending lower. We're at the bottom of our Bollinger Band, 104. Maybe a double bottom, who knows? But we need to break back to that 107 level if we're going to start looking to the upside for the euro against the dollar. So 104 support, 107 resistance in the high daily time frame. Bollinger Bands, the RS MACD still pointing down. Interestingly, the signal line has just broke down, having just broke up for a few days, having been under all these days here. So buys to the downside. Parity still being talked about. Euro under pressure. Miss Lagarde and the ECB very much in focus, need to do something about things as far as the market is concerned. Okay, so I'm going to call it a day, guys, if you don't mind. And we'll see you all again tomorrow. Andrea will be here at the same time tomorrow with a wrap-up of the week. And what a busy week it's been. Miss Lagarde's got a key speech tomorrow. Not a great deal of data tomorrow. We've got, I'm saying not a great deal of data. We've got the final reading of CPI from the ECB later on as well. And obviously overnight for us Europeans, if you're in Asia, it's obviously your main business day. We've got, will anything come from the Bank of Japan? Big potential moves in the yen. Anything in the statement, anything in the press conference from Kuroda later on as well. So watch that, my friends. Say final reading the CPI, 8.1% for Euro area. Is it going to go higher? Watch the numbers tomorrow. And then Fed Chair Powell's speech tomorrow, 3:45. That's 15:45 server time. What's that? 12:45. 13:45 GMT. So take care. All the very best, everyone. Take care, stay safe, and may the pips be with you. Dorcas, that's not a problem, my friend. That's what we're here for. Thank you very much for your time and attending. So take care, everyone. All the very best. Bye.